Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you for coming back for another day of Tesla analysis. Today we will dive into chart analysis for Tesla, and toward the end of the video I will also add Amazon and Shopify if you guys are interested. I will also have timestamp below so you can jump ahead if you're interested there. If you're new to my channel, please consider subscribing. I am a growth stock investor and a trader, and I'd love to share with you my investing and trading journeys. So here's the daily chart for Tesla. Tesla ended the day up over 4% and ended at $1,067.95. As you can see here, Tesla hit one of the previous support, now resistance, at 1078 during the day and then retraced a little bit. But overall, the daily candle looks pretty good. However, on this overall chart, since yesterday was a pretty steep move, today it seems to just like a mini bounce. The price action did not even get to halfway to the body of yesterday's candle, so it is not entirely a sign of reversal. If anything, one could interpret this to be a bearish continuation, which means that tomorrow Tesla can still fall back down. So this alone doesn't really signify anything on the bullish side. All it does is a mini bounce. It might very well be a dead cat bounce, which I certainly hope is not the case, but it is possible. So the volume for today was 150%, with the total shares traded was 42 million shares, with the daily average for the last 30 days was at 28 million shares. Yesterday's volume was 188%. So keep in mind that yesterday's volume, a lot of people speculated that Elon sold 23 million shares of his yesterday, and it's entirely possible. If the daily average is about 28 million, adding another 23 million could easily get it to 180, 190%. So that was a reasonable speculation, although we could never know until Elon confirmed. By the same token, today the volume was 150%, which means that the buy volume was pretty substantial. So if you compare to yesterday's sell volume, today's the volume is predominantly buy volume. Taking a look at the hourly chart here, as you can see that Tesla actually hit the middle pivot point and then consolidate there around 3 hours and then start moving back down, but it bounced very strongly the last hour. Looking at the volume here also, right, you have a lot of buy volume in the first hour, the second hour, and the last hour. So needless to say, Tesla still have a very strong base of buyers waiting to buy at any point that Tesla drops, myself included. The trading range for tomorrow on the upper end would be $1,100. The middle pivot point would be $1,044, which also coincide with one of my strong support here, and the bottom pivot point is $953. Keep in mind that we do have a gap to fill that I previously shared from $950 to $909. If Tesla moved down and past this bottom pivot point tomorrow, then chances are it would fill the gap at $909. So that's entirely possible. As a matter of fact, today the bottom pivot point was at $909, which means that Tesla would have filled the gap today if it continued the selling momentum yesterday. Fortunately for the bulls and unfortunately for the bear, Tesla did not continue the same bearish momentum. It attempted to bounce pretty strongly today. Glancing at the weekly chart here, Tesla have been moving pretty wildly over the last 3 weeks. As you can see that it engorged, if you will, very quickly and very strongly 2 weeks ago. Continued that with last week, but then this week the drop down was pretty steep. This definitely has something to do with both Elon Musk tweeting and Elon Musk selling his shares. I do hope that the market will shake off both the news and the number of shares that are already sold and purchased by someone else and continue to go up from here. The path from here to the upside will still be pretty steep. In order for Tesla to get back to bullish territory, it needs to end the week right around 1160 or so. That would mean that the bottom wick would be very, very long, and that would signal a reversal, at least on the weekly chart here. I don't know if that could be happening. That's $100 from here, and we only have about 2 more days to go. But if Tesla does get back to 1160, then I think next week would still be very bullish. So on this weekly chart, you can also see the gap, the 2 blue lines that I have here. The gap would be from 949 to 909. That's a $40 gap, pretty significant there. It is also a weekly gap, and this represents the first time that Tesla had a breakaway gap with the first gamma squeeze. So I think that from where Tesla is at now at 1067 to where it would fill this gap, it's a very long way to go. So I certainly hope that it wouldn't fill the gap this week, because if it does fill the gap this week and stay around here, this weekly candle would be a terribly bearish candle, and that would not be good for the bulls for a little while. So I certainly hope that Tesla won't fill the gap this week, but we will see what tomorrow charts would look like. On the upside, there are a lot to look forward to for Tesla from now until the end of the year. As I mentioned, you got both gigafactories that are starting in Q4 and can produce vehicles any moment now, if not already. With the deal from Hertz, I do believe that it is the beginning of many deals in the future between Tesla and any other transportation business out there. Obviously, Tesla has competition from Lucid and Rivian, but I do think that Rivian and Lucid focus on different types of market and different types of business model. Tesla is going for the mass volume production that serve the mass market out there. It is also the first to market, and therefore it would have the time to build loyalty. In the long run, I do see Tesla's position in its business is similar to that of Toyota in the ICE vehicles industry, meaning that Tesla is not necessarily positioned itself as top of the line in terms of look, in terms of budget. Lucid might be targeting those consumers, certainly not Tesla. Tesla is more of a overall economical type vehicles that have mass volume out there, maybe a little bit lower margin than Lucid in the long run, but it's still very sustainable. I would take low margin but mass volume over high margin but low volume. Hertz already positioned itself to be the pioneer in EV adoption in the rental car marketplace. So I do think that it is just a matter of time before other companies start ordering more from Tesla. Tesla is in the unique and exclusive position to scale production to meet any business needs that I don't think Rivian or Lucid or the rest of the EV manufacturers out there are capable of at the moment. Of course, things could change in the next 3 to 5 years, but in the next 3 to 5 years, Tesla would have built the brand loyalty and autonomous vehicle fleet beyond imagination. So I wouldn't worry about the next 3 to 5 years for competition to catch up. I don't think there is a slight chance that they can catch up with Tesla, both business models and quality of the vehicle. Both on the business model, on the margin side, as well as quality of these vehicles. Tesla is light years ahead of the competition, as I've said many times in this channel, and I think a lot of Tesla bulls out there would echo my sentiment. For now, I think that as investors, we have to stay focused. We have to realize that owning Tesla stock is full of volatility. Yesterday probably scared a few investors, but not the diehard Tesla believers and Tesla shareholders. I certainly accumulate more shares. In fact, I liquidated some of my positions to move fund around and have more cash availability to buy Tesla. Notably, I sold Alibaba. I wanted to hold that stock for long term, but between Alibaba and Tesla, I would pick Tesla in a heartbeat. So that is where I stand, and I hope that a bunch of you investors out there also scoop up on shares. Let's take a look at Amazon, my second favorite stock to trade. I mentioned in the past on this channel that I own Amazon as well as a long-term investor. Amazon is my second biggest position. Occasionally, I would add in Amazon and to a certain extent Shopify as I deem appropriate. I understand that most of my audience is pretty much Tesla fan, but for some of you traders, the price action for Amazon is relevant to you, so I also want to share that. A few videos ago, I shared that Amazon is really bullish, and it did run pretty fast over the last few days. Today, though, Amazon had a major retracement after filling the gap at 3,600. So if you notice, the blue lines here was the gap that was created from the last earnings, and that was way back in July. Amazon gapped down the day after earnings, and it had not been able to fill that gap since. Today, however, it filled the gap, but then it retraced pretty hard from 3,600 or 3,605 at the height of the day down to 3,482 closing. So that is essentially about $110 drop or reversal, if you will, and that is pretty major. With this candle right here, it does look like a bearish engulfing for Amazon. Amazon is currently above both 200 days SMA at around 33.34 and above 50 days SMA at around 33.92. So needless to say, Amazon has some room to retrace, and usually stock will tend to retrace back to at least 50 days SMA. So I do see Amazon getting back down to about 3,400 or 33.91 easily within the next few days, and then it probably would bounce back up and go back up to all-time high, depending on the market condition. Today market is also very bearish with a reversal in the middle of the day, so it takes a few days for that to shake out, potentially a few weeks, but I do think eventually Amazon will go back up. Taking a look at the hourly chart here, today is essentially a reversal of yesterday bullishness, so that is not good for the bulls temporarily. Let me also take a look at the 15-minute chart for a lower time frame look. So the drop today is pretty much overpowering all of the previous consolidation and advancement. So like I said, I don't think short term is good news for the bulls. The trading range for tomorrow on the upper end, we're at 35.70. The middle pivot point is 35.16, and the bottom pivot point is right at 50 days SMA, give or take. It is at around 33.74. So if Amazon opens the day tomorrow with a gap up, I do think that it could get to about 35.16, which is this middle pivot line here, and that would be a very strong resistance. The next resistance would be 35.30, but it might not even get there. If it does open with a gap up, it would hit this pink pivot point here at 35.16, and I do foresee it falling back down given the bearish momentum today. If it opens with a gap down, it could potentially go down and then reverse back with a V-shaped reversal, right? So depending on how bad the gap down is, if Amazon opens, let's say 34.30 or so, it could move down and hit 33.80 and then bounce really fast back up. If it does bounce tomorrow, it will make a long wick at the bottom, and if that's the case, that is good for the bulls. But for now, I foresee that it could open between flat and slightly up and then reverse to the downside. That is at least more probable in my mind. Now that the gap is filled, Amazon probably will retrace back to 50 days SMA and then start going back up. As far as trading, let's take a look at some of the options possibility here. I'm looking at November 19th, which is next week expiration. For a quick put option for when Tesla go down, that is next week expiration. If you're looking at, let's say, 34.50 for put option, that is about $4,400, so pretty steep right now for that price. If you go further out, let's say 3,400, then it is right around 2,700. If you are looking to play a reversal, meaning that you would look for Amazon to bounce in the morning, so if that's the case, you have to wait for Amazon to hit almost the bottom. I would wait for Amazon to get anywhere near 3,400 before playing the bounce, because right now the trend will still be pretty bearish. Note that the 200 days SMA and the 50 days SMA are not too far apart. So if Amazon ended up dipping and touched 200 days SMA at around 33.20 or so, that is a good opportunity to play reversal as well. But from now until there, that is another $100 to $150 drop. So I don't know if it happens tomorrow, but if it does, that is a good opportunity to play a bounce. So along that line, if you go back to look at November 19th expiration, if you're looking for a call option at around 35.50, after all, Amazon touched 3,600 today, so 35.50 next week is not a bad odds, assuming that Amazon would move down fast and then reverse. You're looking at about $3,300 for next week. If you want to play a little bit further out, you're looking at, let's say, December 3rd, and you're looking at 35.50 or 35.60. That is about $5,800. By the time Amazon gets to the oversold territory, this might become 4,800 or lower, and that would be a pretty good bet for 35.60 4 weeks out, right? Because after all, Amazon touched 3,600 today, so 35.60 is entirely doable, assuming Amazon will eventually reversed. Here's the chart for Shopify. It shares pretty much the same sentiment as Amazon, which is a bearish engulfing today. After hitting a previous resistance at 15.49 over the last couple of days to start retracing back down. Shopify is basically trying to retrace back to 50 days SMA at 14.48, which is only about $30 from here. And then the next stop would be probably close to 200 days SMA, which is at around 13.45. Shopify too, just like Amazon, favors the downside temporarily now, or at least in the next day or so. So if Shopify gaps up in the morning, so it ends the day today at 14.74. Tomorrow, if for whatever reason it opens at 14.88, 14.90, or 1500 or so, I think that's an excellent opportunity to play a put option, bring it all the way down to 14.48, which is 50 days SMA. I think that is a short-term support for Shopify. The trading range for tomorrow range from on the upper end 15.22. The middle pivot point is 14.96. The 50 days SMA here at 14.48, and the bottom pivot point is at 14.21. So if Shopify opens right around this pivot line here, 14.96, that would be wonderful, because it both opens at resistance and it has a gap up. So the first step, I think it would fill that gap, and then it would go down and touch 50 days SMA and potentially the pivot points down here. So that would be the only play I would look at for Shopify tomorrow. Of course, Shopify can always gap down right at 50 days SMA and then go back up to fill the gap. But if that's the case, I think the gap play would be prominent, but nothing else. Because if that's the case, I think gap play is one option, but note that it doesn't really. If that's the case, I think a gap up play, which is a call option, would also be good. But the probability would favor the downside. So I would probably pick for So I would probably wait for the right setup of a gap up so that I can play put to the downside. I think there's a little bit of a divergence on the 30-minute chart here. Shopify is moving sideways, RSI is moving up, so there's a good chance that Shopify would bounce pretty hard in the morning before retracing back down. So keep in mind that, and try to wait for the right setup. A gap up would be a very good setup to play Shopify tomorrow. So good luck to you guys, and I hope you find the information helpful. Comment down below if you like Shopify and Amazon, or if you prefer that I stay away from Shopify and Amazon in these videos. I will try my best to make a separate videos then if you guys prefer that I keep these separate. Other than that, thank you very much for all of your support, and until the next video, bye!